Hello everyone. Today in this lecture we will discuss about pivot point indicator. A pivot point is a technical analysis indicator used to determine the overall trend of the market over different time frame. The pivot point itself is simply the average of the high, low and closing price from the previous trading day. On the subsequent day, the trading above the pivot point is thought to indicate the ongoing bullish sentiment, while the trading below the pivot point indicates the bearish sentiment. Now let's move forward to know how do traders use pivot points. The pivot point sets the general tone for price momentum. Now see, the flow above the P is fine and indicates the strength. Note that P is based on the previous data. One step above the pivot point indicates the intended force to reach the initial resistance, that is R1. A push above the first resistance which provides more strength with a target for the second resistance level, that is R2. The opposite applies equally. A move below the pivot point which indicates weakness with the first support, that is S1, as a target. A break below first support, that is S1, which indicates a further weakness. A trader who uses these values to determine their values, if the price drops to S1 and holds steady, one can start expecting a rise from the support level. Similarly, if the price rise and reach and break the first resistance level or any other resistance level, which can expect a decline. To reinforce this expectation, one must look at the indicative signal. Let's move forward to calculate the pivot points manually on Excel sheet. Now see here, the calculation of pivot point can be performed by a few methods. However, we are going to stick to the 5-point system which uses the following parameters like previous day's high, previous day's low, previous day's close, 2 support levels and 2 resistance levels. Since these equations will have the above mentioned 5 price points, therefore it is called the 5-point system. After the market closes or before it opens the next day, find the day's high and low as well as the close from the most previous trading day. Next, take the sum of high, low and close and then divide by 3. Next, mark this price as the pivot point. Once the P is calculated, we need to compute the S1, S2, R1, R2 on the basis of the formula. Now see here, the high and low in this calculation are from the prior trading day.